Ladies and gentlemen, good day and welcome to the Birla Corporation Q4 and FY2024 earnings conference call hosted by HDFC Securities Limited. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Kumar Ravi. Thank you, and over to you, sir.
Thanks, Hazel. Good afternoon, everyone. On behalf of HDFC Securities, I welcome you all on this call to discuss Birla Corp's financial results for the quarter and year ended March 2024. From the management side, we have Mr. Sandeep Ghosh, MD and CEO, and Mr. Aditya Sarogi, CFO, Group CFO. Before I hand over the conference to the management, I would like to remind you that certain statements made during the course of this call may not be based on historical information or facts and may be forward-looking statements. These statements are based on expectations and projections and may involve a number of risks and uncertainties, such that the actual outcome may differ materially from those suggested by such statements. Thank you, and over to you, Sandeep, sir.
Good afternoon, and thank you very much for taking time out to join. I find there is 137 participants. That's extremely flattering for us, and we know some of the conference timing clashed with your lunch break. So that you could take time off is something we really appreciate and grateful for. I'm Sandeep Ghosh, Managing Director and CEO of Birla Corporation. With me, as mentioned, I have our Group CFO, Mr. Aditya Sarogi. I also have Mr. Rajat Prushti, who is our Chief of Manufacturing and Projects. I have Mr. Kalidas Pramanik, who is our Chief Marketing Officer. And I also have Mr. Arun Agarwal, who is our Group Controller and CFO of Reliance Cement Private Limited, RCCPL to be precise. I will keep my introductory remarks short because you already have seen our press release, and our press release is fairly detailed, and in a way it is probably more elaborate than what many of our peers issue. So most of the facts from our side, whatever I would cover, verbalize, are already covered there. So I wouldn't, go through it again and save you the repetition. Notably, this is the first full year of operations under the new executive team, E-team of the company, which came in place beginning of 2023. I know many of you had in private some apprehensions, reservations, or skepticism about the change of top leadership, but I suppose the results bear out the value which has been brought in by all my colleagues, in particular Mr. Prushti, who is as I mentioned, he's the Chief Manufacturing and Operations Chief of Manufacturing Operations and Projects. Mr. Kalidas Pramanik, who is our Sales and Group Marketing Officer, Sales, Logistics, and Marketing. And of course, our entire commercial and support team led by Mr. Aditya Sarogi, Arun Agarwal, and everybody else. So this is to some extent, to a large extent, a satisfying year for us because we had embarked not only with a new team but with a new strategy, which is a 360-degree strategy encompassing not just one area of operation. We tackled both the harder and softer aspects. There was a lot of initiatives taken even in the HR area and other processes, business processes, and planning processes of the company. And we believe that the pieces are falling together and coming together. That is reflected in the results. Of course, the hero of the year is Mukutban operations, where again, when we started 2023 or we started this fiscal year, there was a lot of apprehensions expressed, a lot of nervousness by many of you in terms of our ability to scale it up, ramp it up, and more importantly, also make it viable and profitable. I hope we've allayed some of those concerns and been able to deliver quarter on quarter on our projections, and finally going ahead of the guidance which we had issued for the last quarter, and which should have been pleasant news for all of you. I will stop here, and I will let my colleagues add a couple of points if they have to, and then we will open it up for question answers so that you have much larger time to discuss issues that may have been left out in our press release and which may be in your mind. Thank you. Adit, would you like to?
Just a couple of information which is probably not in public domain. One, our net debt as of 31st March 2024 was 3,003 crores. And our fuel cost in Q4 was 1 rupee 56 paisa per million kilocalories. Over to you, Mr. Krishnan.
And how much is the debt reduction therefore, Adit? I'd like to indicate.
About 600 crores compared to last year.
So there is a 600 crores debt reduction. I think that has been also
lower than what we had guided for also.
Huh?
Lower than what we had guided for.
Yeah, we had guided, and that was, I think, again, an area of interest for all of you. And so 600 crore reduction is something we request you to take note of, as well as the power cost of 1 rupee 56 paise, which is, again, probably ahead of the guidance which we had given. Rajat?
Yeah, good afternoon to all. I am Rajat here. As rightly said by MD sir, we are continuously working on manufacturing excellence and starting from safety and operation reliability, maintenance reliability. That has helped us a lot to improve our capacity utilizations and reliability of the plant. And further, the journey on the projects, the small projects and the projects on the Sikhar projects, also manufacturing excellence projects, that has also helped us to contain our costs and identify the areas of improvement for which the team is working. And going forward, we will continue to put our best efforts to see that how the safety and the manufacturing excellence will continue to ensure that our capacity utilization, including the projects, whatever we have planned, that will be implemented.
Kali?
Yeah, good afternoon. This is Kalidas Pramani. If we look at quarter 4, all of us we know that there was a challenge in terms of realization in the marketplace, as well as the secondary demand was a little bit muted, but our efforts in terms of pure focus towards the Mukutban, that helped us in terms of realizing the volume, as well as if you look at our realization with respect to industry, more or less we are better off, particularly the project we have taken in terms of the Unnati, where our main focus was how we can reduce our cost, how we can contain our lead, that is the lead management in terms of from logistic point of view, as well as we have seen that how we have sold our premium products. Basically, these are the few areas where we worked hard and we are able to realize better. Also, if you look at the overall growth in quarter 4 as well as in the entire year, if you look at, we have grown 12%. When we have grown the 12%, the major growth came from Mukutban. And other than Mukutban, though we have more than almost 100% capacity utilization, and the growth came from there at 5%. So overall, our strategic approach in terms of our MD's philosophy in terms of 4 V's and objectives with OKR, that helps us in terms of achieving this sorts of performance.
Thank you very much, Arun. You want to say something? Okay. So I think we will go ahead with the questions and answers. Rajesh, you can probably initiate.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman Agrawal from Equirus Securities. Please go ahead.
Yeah, thank you for the opportunity, sir, and many congratulations on strong set, especially on the profitability side. Just to understand this better, sir, if you can share some numbers around Mukutban, especially the volumes that we have done from Mukutban, the amount of it sold in Maharashtra market itself, and the incentives that we have booked for Mukutban.
So we have done volume of 6.6 lakh tons in this quarter out of Mukutban, and we have not booked any incentive in Mukutban. We had envisaged that we will be able to book some incentive, but we are yet to get the registration certificate from the state government. So because of that, we have not been able to book any incentive for Mukutban in this quarter. So from next year, definitely, in this financial year, definitely we'll start booking incentives of Mukutban.
Okay, sir. And
Maharashtra is about 65%.
65%. Understood, sir. And sir, second that we have noted, despite strong performance, there has been an apparent dip in your trade sales, premium sales, as well as blended sales on a percentage basis, on a YY basis. Now, is this something that the entire industry has maybe went through, or does it have something specifically to do with the ramp up of Mukutban plant? Just wanted to understand on that, sir.
Can you just repeat what did you say about the percentage bit?
So, sir, while the absolute volumes for all three parameters, trade sales, blended sales, and the premium sales, while the absolute figures have grown, but on the percentage terms, as a share of overall volumes, there is an apparent dip on the YOY basis. So, just wanted to understand, is this something that the industry in general has seen a better sales of non-trade, or is this something that Mukutban has faced, specifically?
First of all, I'll let Mr. Pramanik answer this. First of all, I don't see how when our total volume has grown, how any of these things in individual parameters would have fallen. And certainly in our premium sales, which is really a function of the trade sales, we have had a growth from 51% to 54% in terms of percentage growth. And that will get reflected commensurately also in the volume. Trade channel, there has been a marginal drop, and that drop is essentially in relation to how the markets have behaved during this period, and particularly in the last few quarters when there was the trade was impaired and there was a greater traction in the infrastructure sector. So there has been from our traditional, when we looked at our traditional mix which we used to have, which is closer to 80% in terms of trade sales, there has been a drop. And of course, there is a contribution of that in Mukutban as well. But that is as per the trend. But we still remain, our trade sales shares remain far higher than the industry average, is what is my impression. You want to add?
No, mostly you have covered the entire points. Actually, in the quarter 4, if you look at the entire industry, the demand mostly came from the infra and commercial segments. When the demand mostly in the infra and commercial segment, so that segment growth, entire industry has grown. Simultaneously, with respect to us also, we have grown in that segment. Though we have in the trade, we have grown in the quarter for 2% in the trade. So overall, if you look at the premium sale against the percentage of the total trade sale, we have in the quarter 4 almost 1%, and the year almost 3% we have grown. But in absolute volume, if you look at, in absolute volume also grown, but percentage-wise, if you look at the overall sale versus this is less one.
Understood, sir. And lastly, last question, if I may. Just wanted to understand the lead distance overall and for the Mukutban plant.
So lead distance for entire company, if you look at in the quarter 4,
341.
349, yes. So 349, that is rail and road combined together. And if I look at other than Mukutban, it is coming around 337. So that
420.
So the
Mukutban is 420 is the lead.
Yeah.
Understood, sir. Thank you, sir. I'll fall back into you.
I will only now request, we have answered, the first questioner, we've tried to answer all the questions. So request participants not to repeat the questions and restrict your question to one question only, because that will give others, because we have a long queue and we are now total participants have gone up to 179 is what I noticed. It will give others an opportunity to ask questions. So people who are ahead of the queue should not take up disproportionate time is what my submission would be. Thank you.
Thank you, sir. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you and congratulations on great set of numbers. Sir, my question is now what's the guidance on the profitability for EBITDA per ton for FY25 and also in terms of the volume, total volume growth, and if possible, how much are we looking at from the Mukutban in FY25?
See, in terms of volume, we are expecting a 8 to 10% growth, and in EBITDA per ton also, we are expecting an 8 to 10% growth next financial year. In Mukutban, we are expecting to have a volume of about 2.7 million tons.
Sir, this 8 to 10% EBITDA per ton growth is from Q4 or FY24?
FY24. It is 808 or 9 rupees whatever.
Okay. Thank you, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, sir, and thank you for the opportunity. Sir, Augiji, you mentioned our net debt at 3,003 crore. What are the current year's maturity? And for the tax advantage for Mukutban, we will be starting the collection from the next year. So for this year volume, there will be no tax advantage, and it will be retrospectively or prospectively that we will get the same.
Our current year's maturity is about 520 crores. And what was the second question?
Second question was on the tax advantage for Mukutban, which you mentioned that due to registration issue, so we will be getting that advantage for previous year volume also, last year volumes also, or will it be?
That we are not very clear. Only once we get the registration certificate, we'll be able to comment. Maybe by the next quarter Concall, we'll have the answer to that.
Okay. I'll join the queue, sir. Thank you.
Thank you. The next question is from the line of Vipul Kumar Anupchand Shah from Sumangal Investment. Please go ahead.
Hi, thank you, and congratulations for very good set of numbers. Any guidance for yearly incentives for Mukutban plant, sir?
The overall incentive next year will be around 100 crores or 110 crores, including other plants.
So that will be inclusive of all plants, right?
Yeah, all plants 110 against around 160 what we have accrued in financial year 24.
When we talk of all plants, as you would know, our Kundangan incentives have ended.
Yes.
And so there are other smaller incentives in Rajasthan, in Raebareli, etc. Yeah. So those things taken together, the bulk will of course come from Mukutban.
Right.
Thank you, sir.
Thank you. The next question is from the line of Amit Morarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, on Mukutban, I didn't get the number. You said the guidance for FY25 will be what, 2.7 million tons?
Correct.
2.8, okay. And what was the exit that you did in FY24?
2.5 million lakh tons in March.
2.53, yeah.
Okay, right. And also, would you be able to provide the split between Maharashtra and non-Maharashtra sales in this number, like at the exit level?
About 65% of sales are within Maharashtra.
You said that earlier, 65%.
Sure. Also, I was just wondering, like if you are to do 2.8 million ton volume with, let's say, 2/3 of sales in Maharashtra, like, shouldn't the incentives booking be higher than 110 crores in that case?
First of all, we said 2.7, not 2.8. For the sake of accuracy, let us record that. And incentive percentages depend on various functions, including pricing and, our final split of trade, non-trade, and various other things.
Within Maharashtra and the input tax credit, various factors. So that is the number
we have taken as per our realistic estimates.
So it's 14% state GST that you accrue, right?
Yeah, but that's based on actual end selling price. End selling price differs between trade and non-trade. It also differs between areas. So there are various assumptions which come in. We have taken all those assumptions and come to what in our view is a realistic estimate, and that is what we can predict. And all these things have been built into our guidance of about 8% increase, 8 to 10% increase in our EBITDA per ton.
Okay, thanks. I will come back in the queue later.
Thank you. The next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, just one question on the incentives part. So how much we had recognized in FY24, and I believe guidance you have provided is 110 crore.
We just said we have not recognized anything from Mukutban.
Total incentives we have recognized is around 160 crores in FY24.
Okay.
Okay, and we have not recognized any incentive out of Mukutban in FY24.
So FY25 guidance includes Mukutban, or how is it placed?
Mukutban, including Mukutban, we have guided for about 110 crores.
As we said earlier, you probably didn't pay attention. Our Kundanganj incentive is has ended really on March 31st. So Kundanganj won't come. So this 160 crores this year, a bulk of it has come from Kundanganj. Next year, the bulk will come from Mukutban, on which we've already stated our estimates.
Okay. Great, sir. And secondly, sir, on the expansion side, so is the grinding unit which we have announced, is this the only expansion we are looking at, or are there any expansion in the clinker capacity which we are pursuing?
First of all, I would request you again to keep your questions to only one question, because others don't get a chance. But since you have already asked it, we have stated that our clinker capacity expansion is not going to come just now. So there's no plan for clinker capacity, and we have announced our grinding unit plans that will happen in the course which is indicated. Thank you.
Thank you. The next question is from the line of Mohit Jain from Tara Capital Partners. Please go ahead.
Hello.
Yes, sir, you're audible.
Yeah. Hi, sir. Thanks for giving me the opportunity. I just wanted to have your views as to how the competition in the central market is panning out, considering the fact that, significant new capacities have come up recently. So, in a right now, what is your outlook overall?
Competition coming up would be the issue if the capacity is, or the supplies are in excess of what is the expansion in the market. Last year, we did not face any such intense competitive scenario over there in terms of what you might call any kind of intensive fight for market shares. This year, it's too early to predict. It all depends on how the growth happens in the next 2 quarters especially. The capacities having come up, we have to wait and watch what is going to be the behavior of all players, whether they'd still go for volume at the cost of price or they would behave more rationally.
Mm-hmm. Yeah, so is it too early to say that we will face any kind of a headwind to our volume guidance if the competition increases? How will you look at it then?
We do not expect it because we are practically sold out, or more than sold out in those areas. We have got a very strong brand presence as well as a channel presence. As we have in the past indicated, we are the only company which operates at both ends of the market. We have a premium product market and popular, or what you call the value segment, with almost equal presence in both. This is one of our strongest position because our very few channel partners can offer both the products from the same company. And these areas, especially in the central market, when you're talking about central UP, East UP, I think we are in a fairly strong competitive position. And since we do not have any anxiety to sell more volumes, we hope to, and given our strengths of our brands, our quality parameters, our location of our plants in the region, we expect to, just as we have done this year, we expect to hold our position.
Thank you, sir.
Thank you. The next question is from the line of Aman Agrawal from Equirus Security. Please go ahead.
Yes, sir. So just wanted to confirm on the timelines for upcoming coal mines, Bikram coal mine and Marki Barka. You told Bikram by 2Q25 and Marki Barka by FY26. Timelines remain intact, sir?
See, Bikram we are expecting in Q4 of FY25 and Marki Barka we are expecting in FY26-27.
26-27. Understood, sir. So that's it from my side.
Thank you. The next question is from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
So firstly, congrats on a good set of numbers. I have a couple of questions. One is on prices. We seem to have had really good control during this quarter where peers have all cut prices very sharply. So could you give me an understanding of whether it was a geographic mix or it was more pricing discipline from our end which helped in doing this?
I think Mr. Pramanik has said this in his preamble at the opening remarks. Our strategy is very clear. We do not have in these markets any anxiety for volumes because we do not, our capacity utilization is 100% in the key markets which are core markets of central India. Our focus has been on premium products and we've continued to make investments in the premium product brand strengthening, and which will continue in future. So our focus has been on that, and therefore we have not diluted our price positioning at all. And coupled with that, as he mentioned, we have taken under this project Unnati several measures, including one is lead reduction. Secondly, is selling more in higher realization markets. That's how we have been able to keep our realization higher than maybe some of our peers. And that's the strategy, and we would we would like to continue on that and improve upon that strategy. But obviously, we cannot be totally insulated with market movement. If the market prices come down, we will also be affected. That goes without saying.
Sure, sir. So just one last question. Can you just tell me what your capex guidance would be for 25 and 26?
800 crores. And for FY24-25, not 25-26. For 24-25, it is 800 crores. Around 800 crores.
Okay, sir. And for 26, do you have a number?
No, we don't have a number for 26 at this juncture.
Sure, sir. Thank you, sir.
Thank you. The next question is from the line of Viraj Mahadevia from MoneyGrow. Please go ahead.
Hi, sir. Congratulations. Fantastic numbers. You've shown a meaningful uptick in the EBITDA margins through a combination of what you suggested was probably not taking massive price cuts as well as the cost-saving measures to 18% in Q4. Can you guide us towards a potential EBITDA margin range for FY25?
We've already said that, per ton we are at the moment budgeting for about 8 to 10% increase in the EBITDA per ton. And that is what we can say from our outlook of next year, which has been elaborated in our press release. So unless we have any further visibility, this is what we would like to stick with, 8 to 10%.
Okay, thank you.
Thank you. The next question is from the line of Vipul Kumar Anup Chand Shah from Sumangal Investment. Please go ahead.
Yeah, all my questions have been answered. Thank you.
Thank you, sir. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, Saraogi, you mentioned 800 crore capex for the current financial year 24-25. Where will the money spent for, and what will be the capacity augmentation? And then our net debt numbers will remain flat for this year, even with the current maturities, because the EBITDA adjusted number with the current maturity and the capex works out to flattish numbers.
See, out of this 800 crores, we plan to spend about 400 crores on sustenance capex, about 200 crores on development of coal mines, and another 200 crores on Kundanganj line 3. And as regards the net debt number, we expect to close that number below 3,000 by the end of next year.
So 3,003 is close to 3,000 only. So money.
Below that.
Okay.
That's all I can say at this time.
Right, sir. I'll again join, sir. One more question is there.
Saket, you are monopolizing. You're being the closest to Calcutta and to our office.
Yes, sir.
We can't give you undue advantage.
No, sir. I will join the queue, sir. I will join the queue. Not at all, sir. No, not at all. Rules of the game.
Thank you. The next question is from the line of Girija Rai from Asit C. Mehta Financial Service Limited. Please go ahead.
Thank you for this opportunity and more congratulations on good set of numbers. So my first question is with regards to premium segment. So just wanted to check our premium segment prices are last quarter 2 to 3 rupees more than other players. So are we going to see any kind of threat when other players are coming up with premium segment sales? And what is the price right now for the premium segment sales?
Price for premium segment would vary from market to market. And it will vary from period to period. So therefore, we can't talk of a single pricing. Other people coming into premium segment, they would come in only if the premium segment is growing. They cannot come in to cannibalize somebody else's premium product per se. So we don't see that as a problem for us. With all the brand investments, I don't know how much you've been following this company's brand strategy. We, right from the time of 2016, when we acquired Reliance, initially, again, a lot of people apprehended that whether we will be able to maintain the price premium of the Reliance brand or whether that will get pulled down to our legacy brands, which used to operate primarily in the popular segment. But I think what we achieved significantly at that point in time, and I was in the company then, some of you would recall, as the CAO and CMO, we were one of the first companies to adopt a brand architecture. In that brand architecture, we had our flagship brand called Perfect Plus, and that cut across all the geographies where we were operating. And we have consistently gone on and investing in that brand, and we are seeing clear dividends of that. A classic example or a best example of that is when we entered Mukutban, where we were a totally new kid on the block. It was for us, it was a virgin territory. We didn't know. We have practically from day one, we are selling 40% as premium volume, and as Perfect Plus, where we found immediate acceptance of the brand. That shows the brand equity which has been created over the years. And in a core market of UP and Eastern Central UP, I'm happy to state, and some of you can verify this through your own market checks, today our Perfect Plus sells at a premium over some of our very well-entrenched and large competitors. It is clearly established that we are selling higher than that. So, and we, as I mentioned, we will continue to invest on it. Those of you who follow cricket on television, or even today following the political news on television for the elections, you will see the kind of visibility this brand has got there. And this is part of strategy, and that is how we have been going. Whereas our regional brands, or what we call our regional champions, which are the heritage brand, we have separate strategy for that. Like Samrat is a very big brand in Central India. In the popular segment, it has got very clear clientele, customer segment where it goes. Similarly, we have Chetak in Rajasthan, which is a heritage brand with a long history, which we support there. So those brands are supported. So we have been one company which has now for much before others have entered, tried this kind of brand architecture. We have been operating in that way, and that's why I said we are the few companies which can make offerings in both the segments. So when you look at our dealers, especially in our core market, and whereas the figures indicate our premium brand sells over 50%, and almost equal quantity is sold in the popular brand, our channel is one of the few channels which can offer the customer both the brands from the same shelf, same counter. And therefore, that is played. And if you were to compare with many of our peer group, which you are quoting, is not for me to say the numbers. They are talking, even some large companies are talking about 10 to 12% in the premium category. Whereas we, as we said, we are operating already at 57% in our principal markets.
Great, sir. Great. That's quite helpful. And second question was with regards to freight cost. So I can see there is a decline on freight cost, 3% on quarter-on-quarter basis. So we have sold, I think we are catering to Gujarat market from Mukutban plant as well. So any further kind of reduction in, or what kind of strategy are we using to see a respite on freight cost?
We look at a net realization. So if you see a Mukutban situation, obviously there we will have to now spread ourselves further. So you will not get a freight cost reduction in Mukutban. Whereas in the markets where we have saturated, there we try to see how we optimize on our freight costs further to increase our realization. So it's a combination of those factors. So we don't look at this thing in isolation. We look at from market to market. We look at where is the scope for optimization with road versus rail. But even when we look at road, we try to see where we can do direct dispatches from factory instead of routing them through the go-downs or there. And so that is a continuous optimization process which goes on. But it's a market-to-market, status. So this distance per se or just the number of freight cost doesn't, make absolute sense because we have to finally look at what is our net NODT realization.
Okay, thank you. So if I may allow for the last question. So if I see from past 12 quarters, there is a price decline, more price impact in central region. Rest of the regions like western regions and northern regions and eastern regions prices are at good and stable, I can say. But central region prices are quite down. So are you seeing any kind of price instead of in near term any price stabilization in central region?
Why would you say central region prices are down? It's all a matter of averaging from quarter to quarter, which has happened in different areas. You see, Maharashtra was quite depressed for the better part of last year. North picked up at a point in time, then there has been slippages. So this has been going on, and I think, as I kept saying in previous conversations everywhere, that I think the overall last year's price movement was quite in line with expectations or what has been the projections at the beginning of the year. At the beginning of the year, all of you who are the analysts as well as firms like CRISIL and everybody had predicted just about 1% growth in pricing throughout the year. So basically a flattish pricing scenario for all India. And whereas they had talked about a high single digit between 8 to 10% growth in volumes, that is precisely how it played out last year. This year is different, and you'll have to see from quarter to quarter because there are several factors, as we have indicated in our own press release. This quarter, is affected by elections, extreme heat in most of the country. And once the elections and everything is over, it will probably take a little while for the economic condition to stabilize. But then we have to see how the monsoons play out in the next quarter. So it's a bit early for anybody to predict how the demand scenario will go and therefore consequently how the price scenario will go. But looking at last year, I don't see, a great cause for disappointment except in the last quarter where it was unexpectedly soft because every time, traditionally in the last quarter, prices used to go up in the cement industry, so is to demand. But this is one aberration of a year when in the last quarter you actually saw a decline.
Yes, sir. Thank you very much, sir. Thank you very much.
Thank you. The next question is from the line of Tushar, who is an individual investor. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. My question is, how much savings are possible from the Bikram coal mine that are to be commissioned in Q4 FY25?
In this year, we don't envisage much saving because it will just be a ramp-up phase. The saving will start accruing from next financial year.
Okay. Okay, sir. Thank you.
Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Mr. Rajesh Kumar Ravi. Please go ahead.
Yeah. Thanks everyone for joining in the call. If there are any closing remarks from the management, after that we will close the call. Over to you, sir.
No, I would just like to thank all of you for joining and for the support and understanding which you have extended to us over the last entire year. And it has been very meaningful conversations whenever we have either met in person or spoken in these sort of calls. And we will continue to count on your good wishes and goodwill and understanding. And I hope, we never used to interact earlier. As you know, it is only last year we started the conference call process as well as having, investor roadshows, etc. I hope this has been, for us, it has been a great learning experience, very meaningful experience. I hope it has been mutually rewarding and wish you all the very best for the new financial year. And please take care of yourselves in the heat. In this weather, it's excruciatingly hot. Of yourself, just and thank you very much. And hope to see you in about 3 months' time.
On behalf of HDFC Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.